I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome to the show, Tim.
Hey, Jim. Thanks again for having me.
You're telling me off air you used to be a frequent guest on business television shows, but you're no longer being invited to share your opinions with people. Why do you think the invites have stopped?
Well, no, I think back in what I was referring to is back in 2000 when I had done the article identifying the top, and which was published in a number of magazines. There was I had some conversation with one of the commentators, and I guess there's no benefit or no need to name names, but one of the commentators on CNBC, and he read the material and I mean openly told me, he said, I can't have you come on to say what you have to say. And so I guess the point there is that I know that they don't want to hear, or I guess they're selective about the negativity and what I just deem the truth. I mean, the truth is what the truth is, but they didn't want to hear it. And then I think the other thing that with this rally in particular, or when I say this rally, I'm talking about the rally out of the 09 low, and talking about it being a bear market rally and how it's extended and all that. Well, that story gets old. And I understand that. I mean, it gets old for me. Try writing a newsletter and trying to tell people about this, and comparing it to statistics. I mean, I get it. The message gets old. But that doesn't change that it is what it is. It doesn't change the fact that, going looking at all the market history since 1896 tells me what it tells me. And so I think that this rally has done a number of on people, on their psyche, in a number of ways. I mean, it's been very convincing, and not just myself, but there are others talking about the dire straits of the economy and the stock market and how this is all going to end. And when it doesn't happen, it just people discount it. And so I think it's a combination of things.
Well, you've pointed out the bounce back after the August 24th giant drop in the equity markets. It seems to lead people to think, okay, that's the correction. It's not going to get any worse than that.
And that's correct. And in all truth, that has to happen. I mean, ultimately, it doesn't matter. If you look at any decline throughout history, any decline, even in 1987, 2000, 2007, the top in 2007. You go back to 29. You look at the top in the bull market top in 1966. It doesn't matter. It's a structural shift that has to take place. In other words, you get the top, you get an initial leg down, and in my world, that initial leg down, does it occur with your statistical DNA markers? If so, how many of them? If not, then do they continue? Do the other ones fall in place when you do get the bounce like out of the August low? These things have to happen. It's not just this top; it's all tops, and it's also a process with the bottom. So just to clarify, but anyway, with the top, you have to have the top. You have to decline. And like I said, in my world, we need the DNA markers, we need our Dow theory stuff, we need everything to fall in place. Otherwise, it is just a correction. But then when you have that stuff in place, you get the decline, and then you get a rally. You get a relief rally, like we got out of the August low. Okay, now certain things have to happen with that. And if they do, then it confirms that you have indeed seen the top. If you don't see that, then what you're left with is a continuation of the setup. In other words, it hasn't come to fruition just yet, and it's going to morph a little bit. And it doesn't change the fact that it's a very, very, very the most extended 4-year cycle in stock market history.
Is it true the numbers look good only because of a couple of stocks, say like Google or Apple?
Well, I don't do the fundamentals per se, looking at individual stocks and that sort of thing, but I can tell you, looking at the internals, looking at, for example, new highs, new lows, looking at breadth, looking at all the internal, looking at volume, looking at all the internal stuff, I think what you're alluding to is absolutely right, and that is the market is being held up by fewer and fewer and fewer stocks. And so it's kind of a levitation, if you will, and that's been going on for, increasingly so for a year. At some point it just topples, and that process, I think, started coming out of the May high. But then when you stand back and look at it, from a distance, and what you see is that has been going on. This entire rally out of the 09 low has occurred on less volume. So it's kind of a multi-layered deal. But yes, the answer to the question is yes. I think that it is a levitation on fewer and fewer issues.
We'll have more with Tim Cyclesman Wood right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's the story on crude oil?
Well, I'm not looking at what crude oil is doing today, but I don't have a chart. I've been out of the office. But crude oil has been, I've been saying lower prices, and so far that has happened. Crude oil is at a very, very, very important juncture. Structurally, it is set up a lot like equities, in that we had an August low, we've bounced, and then, it's just kind of hovered. It hasn't performed as well as equities, and now it's retesting the August low. I have sell signals on crude oil and have both short and intermediate term. And unless we can get something going on to where we get another short-term buy signal that quickly evolves into an intermediate-term buy signal at a level above the August low, then, I think obviously we violate the August low before an intermediate and short-term buy signal is triggered. Then that's going to pave the way for the lower prices, like I've been saying. Ultimately, I said that we would go into the 20s, 30s, and then further into the 20s, and we did get into. I think we went to like $37, something like that. But it's at that juncture now where if we don't get a short and intermediate term buy signal, which will in turn allow the intermediate term advance out of the August low to continue, it'll give it the opportunity to continue. Then at that point, if we fail to get, I don't know how to say that, but if we fail to get that intermediate term buy signal, then that opportunity is lost, the intermediate term tops in, and the resumption to the downside will continue.
That's bad news for companies that take the oil out of the ground, but what about other industrials that use energy? Is this good news for them?
Well, obviously I think it would be good news for them, but I don't think, there's also been the argument that I heard early on last year, this time, that declining oil prices was good for the economy. And I understand the argument, but I don't think it works that way. I think the economy has far more problems than the savings from declining oil prices. We got a lot more going on than that.
Well, of course, you look at the tens of thousands of jobs lost. Those are well-paying jobs. The guys easily make $100,000, $200,000 a year. if they get a new job, it's going to be flipping burgers. Hardly the same thing at all, is it?
Exactly.
What kind of a prediction do we have for gold? Usually if we hear the equity markets are about to take a downturn, gold picks up. So far that hasn't been the case, but will it?
It hasn't been the case. I have said ever since the top in 2009, with the 9-year cycle, the top in 2011, the 9-year cycle topped in 2011, and ever since that top, I've been saying that every intermediate term advance would be a failure, and that we would go to lower prices in gold as we move down into the 9-year cycle low, and that is exactly what has happened. The 9-year cycle low, I'm thinking, is going to occur probably in the 16. I've been saying the 16, 17 time frame. I think we're setting up for it to possibly occur in next year, in the 16 time frame.
So it's not going to be going up. Is this a good time to be buying gold?
I don't want to, not until we get confirmation of the 9-year cycle low, because we don't know how much lower we're going to go as we probe into that 9-year cycle low. I mean, what if it's $100 lower? What if it's $300 lower? As long as that longer term cycle is pressing lower, I don't want any part of it.
Is there any particular cycle that's due for an upturn right now?
Well, no, I don't. I think the place to be at this point is strictly cash. I mean, equities is high risk. It's the most extended 4-year cycle since the inception of the Dow Jones Industrial Average in 1896. We have a bearish primary trend change. We have commodities collapsing. We have, you tell me, what, I see nothing. The only thing that's been positive lately has been the dollar. And I know that there's been people glooming and dooming the dollar, but, we had the cycles work. We had a 4-year cycle low, and the dollar's been pressing higher in conjunction with that low. And, I think the place to be is in cash at this point. I've been saying that for a while, and, I'm sticking to that.
How long do you think the climb in the U.S. dollar is going to last?
Until we get to set up to cap it. And I know that's not an answer that you were looking for, in the sense that you can say, on this date, but it doesn't work that way. I mean, it's just like the advance out of the 2009 low in equities. I mean, it's going to continue until we get the setup to cap the 4-year cycle advance. And that's all that has to do with structure. And when I say structure, we need to see the structure roll. We need to see, within the 4-year cycle in the dollar, there are annual cycles. There's an intermediate degree cycle, and we need to see some structural failures. We need to see an intermediate term advance that doesn't move above a previous intermediate term advance. We need to see a left translated cycle. We need to see one of the annual cycles that peaks in less than 6 months. We need to see some of those DNA markers and structural events happen with the dollar to cap it. And until then, it's gonna move higher. I don't know how long that's gonna be. It's gonna be, like I said, until we see the structural stuff fall in place.
I asked once what would happen if the U.S. tried to devalue their dollar. Can they do it? And they said, well, just don't pay your debts. If the government doesn't pay its debts, you'll see the value of the U.S. dollar plummet.
And we'll see that in the charts. I mean, if it happens, everything's reflective in price.
Are there any other commodities that might have a chance right now? I've heard that zinc was a good bet because they were shutting down the world's 3 biggest zinc mines, but that hasn't happened. Do people try to time things with events rather than looking at cycles?
Of course. And I mean, there are people that, that buy soybeans because of, weather predictions or whatever. That's not what I do. I look at the structure, the cycles, and, and just leave the fundamentals out of the picture, because, I mean, the cycles can be, and technicals can be hard enough to try to time, much less fundamentals, because, when's the fundamental going to matter? That's a very difficult thing to know. I mean, does the weather affect the crop price tomorrow, or is it going to take 6 months, or does it affect it at all because you get rain the next day? With the cycles, they're, in most markets, they're somewhat regular. The one factor with the manipulation and the liquidity and what we've been seeing with equities is, yes, there's been some irregularities with cycles. There's been some strange behavior. The cycles are still there, but there has been some strange behavior with the cycles, which has made it a little more difficult with equities. But everything else, no, the cycles are working perfectly, and that's what I rely on, is the cycles.
So, Tim, your overall advice to people right now is, with the bumpy ride down, it looks like it's not going to be a pleasant ride, is it?
No, Jim. The problem is the market has been so extended, held up, and manipulated that, we have literally, I know people don't see it this way, but we have this artificial facade, if you will. I'm reluctant to call it a bubble, but that's really what it is. It's a bubble in the sense that it's not real. And you have the rotten economy at the core, but it's kind of camouflaged, or it is camouflaged, by equities and the fact that equity prices have held up. And that's why they have done what they have done to try to hold the equity market up, is to provide cover, camouflage for the underlying stinking core, the economy. And, how long this shell game can go on, who knows? But we have major cracks. And what I mean by major cracks is technical cracks. We have, like I said, the Dow theory primary trend change that occurred back in August. That's still in force. We knew we were going to have a counter-trend rally here, and we have. We knew that this counter-trend rally could take the market to a new high, but it could also further cement the deal with the stuff that fell in place, between really last March and July and into August. So we're at a critical point. And then once the setup, I would argue that based on, the technical data alone, once the setup is firmly solidified, I don't think there's anything it can do. I think Mother Nature has its way then. But we're still in the process of that setup evolving. And, the potential that we saw the top back in, May is still viable. But again, this rally had to happen at some point. And, like I said, it's going to serve as structural confirmation that, yes, we do have the top, or it's going to lead to, an evolution, if you will, of the top, in that it'll continue to evolve with maybe another push up. We'll see the setup drag out, the can be kicked down the road, so to speak. But ultimately, there's never been a 4-year cycle that hasn't turned down. I mean, you look back to 1896, the market goes up, the market goes down, the market goes up, the market goes down. It's almost like clockwork. This has been one ginormous exception, but the market has to excel, and that will come ultimately with a setup.
So it's just wait and see.
It's wait and see. And all the while, it's like knowing that you're in a minefield, but you don't know which step is going to send the mine. But you know what I'm saying? You don't know which step you're going to step on the mine is going to blow yourself up, but you know you're there. I mean, I know, the one thing I know with certainty is the environment in which we operate, which is high risk, very, very high risk. And I know that we have some of the DNA markers in place. I know that we have a bearish primary trend change. I know all these things, and I know the risk associated with it. But what you don't know until you see it is when the other dominoes fall, to flip the lever, so to speak, to finish the setup. And we will see that. And that's part of what we're waiting on. That's part of what this rally will tell us.
Tim, thanks a lot for chatting with us.
Thank you, Jim.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.